The Bank of Canada has started to lower its overnight interest rate. And what we've seen is a 25 basis point cut from 5% to 4.75%. In this video today, I'm going to touch upon what I actually think this means. Why are realtors just pumping the market and saying if you're a first time buyer, you need to get in right now? I'm going to show a little bit of data and why that's probably not true and just give you my honest thoughts on what I think is happening here. So there's not going to be too much editing on this one. It's kind of going to be off the cuff. So let's get into it. So yeah, the Bank of Canada dropped the rate by 25 basis points. There was a 75% chance that they were going to do this. So it's not even like really something that is a crazy shock to the market. But I want to touch upon the two different rates because I've had people text me about this and, oh, that's great. That's good. That means that my rate should be coming down. So they dropped the overnight rate. So remember that the overnight rate is connected to the variable rate, and the variable rate is significantly higher right now than the fixed rate. And the fixed rate is connected to the bond yield, and bond traders trade this, and that's what sets the precedent and the price. So the bond market has been pricing in that they are going to cut, that the Bank of Canada is going to cut. And what people forget is that when the Bank of Canada cuts, that means that the economy isn't doing too well. And Daniel Foch tweeted this, and he's a friend of the show. I don't know who needs to hear this, but recessions aren't bullish for real estate. Now, what do I mean by that? When the Bank of Canada cuts, it means that the economy isn't doing well, and the Canadian economy isn't doing well. What we're seeing is negative GDP per capita for 7 straight quarters. So what does that mean? It means that the productivity per person in Canada is going down the tubes. We've just had a lost decade, according to RBC. They had a great article that they put out in response to, why is Canada lagging so far behind the US? So yeah, this probably isn't bullish for real estate. It doesn't mean people have more money. And another guy on Twitter, Red Pill Rick, I'll post it here, he shows what 25 basis points of cuts does to people's actual payments. So if you're at 2170 per month, you're going to 2123 per month. If you're at 4,457, you're going to 4,061. If you're at $651 per month, you're going to $630. And you can see the rest here. So it actually doesn't do a lot to the market. What it does show is that it does give some people relief, and it shows kind of a pivot. But what we're going to see is still more pain, right? Like people still need to renew from the lows of COVIDs in the next 2 years. Those payments of 2% are now going to have to renew in the fives. That's going to be a shock for people, right? They can go ahead and they can extend the amortization. Yeah, that's for sure. But a big question mark is, how does Canada actually become more productive? How do we get our GDP up without just bringing in immigrants? We need to get our GDP up through investments in certain sectors, so we create more jobs, we create more growth, and we create more exports to other countries, and we can try to alleviate some pressure here in Canada by having everyday items be more cheaper, like groceries, like gas, different things like that. So I don't know. I really wanted to make this video because I was just on Instagram and I was just seeing all these realtors. Obviously, I'm in the business, so I follow a lot. Just post, 25 basis points down. You go get your pre-approvals and let's get out there. Let's buy. Like they're doing that because they want to check. Those are people who don't understand bond yields. They don't understand variable rates. They don't understand what actually happened. They just say rate go down, price go up. It's it's very stupid. So here's another tweet by Market Mania. I watch some of his stuff. He's very bearish, but hey, I always like to read both sides. Bank of Canada Governor Tiff Macklem says it would be prudent if households, governments, and businesses plan that interest rates will be higher than pre-pandemic. He basically said interest rates aren't going back to pre-pandemic lows, right? They're going to stay higher than they were. And the reason why rates were so low during the pandemic was because we had a global crisis, like the world shut down. And that's what happens, right? Rates start to come down as the economy gets really bad. And that's what we're seeing, right? So with all these realtors just pushing this narrative that you need to go out and buy, this is going to bring relief to the market, it's probably not going to, right? Like it's a good sign if, hey, you have a variable rate and you're struggling, and rates are starting to come down, right? Because we've seen such a long period of time that rates have just gone up or they've just held the rate. But now what we're seeing is, hey, here's a little bit of a pivot. We're going down 25 basis points. RBC is expecting that they will continue to cut even at the next announcement. They're going to cut again. Maybe this is going to bring more relief as time goes on. But yeah, moving forward and similar to our own forecast, the BOC expects unwinding and price pressures will persist. So yeah, they think that the CPI, will continue to come down, but there's certain things that are still at risk, right? Like wars, and it could increase the oil prices, which increases inflation. So the BOC will get two additional monthly inflation and labor market reports, as well as the second quarter business and consumer surveys before the next scheduled policy decision in July. Those should all offer more clues on a few key pressure points that the BOC highlighted, including housing, wage growth, and inflation itself. So RBC's own base case assumes another 25 basis point cut in July. So RBC was right. I've been reading some of their economic stuff, and they were saying that a cut was coming in June. I didn't think there would be until the GDP data came out, and it was very bearish. But last thing here is that what you should be looking at is this Canada 5-year bond, right? We're seeing it decline. And we've seen it at 3.8%. This was in May, and now it's down around 3.4%. So that's where the fixed rate comes from. It comes from this bond yield, and then basically banks add a premium to it because banks can buy bonds, but instead what they do is they lend out money for real estate, add a premium so they can make more money. That's essentially what they do in terms of how they set that rate, and traders set that rate. But yeah, we're still seeing the fixed rate well below the variable rate. The variable rate's in the high sixes, and you can get a 3-year fixed rate at about 5.2, 5.3%. So, you have a long way for that overnight rate, which is everyone's focused on, in coming down to match that fixed rate. Historically, variable rates have been lower than the fixed rate. Obviously, we saw a crazy difference now that we had the fastest rate hiking cycle in Canadian history. So things have changed for sure. One last thing to note is that investors chase yield, and when they chase yield, and there's higher yields right now in the US on their bonds, our loonie will suffer. Our loonie is going to devalue versus the US dollar. How much, no one knows, but time will tell. So, it's a small cut, but the US Federal Reserve is not supposed to cut until December. So how many cuts can we see before then, before the loonie just takes too much of a beating and we start importing inflation? It's something to watch for. So anyways, those were just my thoughts. I really wanted just to get a video out because I know it's a small channel that we have, but I just can't bear looking at these Instagrams from realtors and mortgage agents. I'm not saying this is a bad thing, but to create FOMO and create this idea that all of a sudden showings are going to spike, there's going to be more offers on a 25 basis point cut. You saw the numbers on the difference in the price point of the mortgages. It's not like it's $1,000 difference all of a sudden. It's, maybe $100. If you have a high levered household, sometimes it's $50. It doesn't change much. And just explaining the difference between the variable being connected to what the Bank of Canada is doing and the fixed rate, which is controlled by the bond market. People need to wrap their heads around this idea and understand the economics behind it. Because people think, well, the rate went down 25 basis points. That means that, the fixed rate that I locked into is automatically going to go down 25 basis points, and I'm going to be able to afford way more house and my payments are going to be better. That's far from the truth. So yeah, I mean, if there's a realtor that you're working with and they're telling you need to get in now, maybe find a new realtor that has a little bit more data and more focused on the market and understanding it a bit better, not blindly just posting headlines. So anyways, guys, thanks for the support. We got some good guests coming up. So the more you guys like and subscribe to these videos, the better guests that we can get out there. And again, it's just free information and it's just a conversation to try and help you make better decisions. So if you do want to support the channel, that's the best way to do it. Appreciate it. We'll see you guys very soon for a longer form podcast. Just wanted to get a quick video out there. Take care.